Hey guys, this is a Forex price action trading course part 2. This is lesson number 5. Bias changes through recent strength. Okay, let's get going. Alright, here's a lesson overview. Now first I'll be going over the basic paradigm of a bias change with recent strength, or in other words, compact price action. And then I'll go on to a basic explanation of compact price action itself. And lastly, and most importantly, we'll go over the aesthetic requirements for a legitimate compact price action. Okay, so the basic paradigm of a bias change with recent strength. Number 1, in a given bias, if recent strength is created, the bias will change along with the main stop loss and main target levels, from here on referred to as compact price action. Alright. Okay, so I'll be referring to recent strength as compact price action from this point on. Now, if you recall in this pound dollar weekly chart, because there was a strong short trade that formed, then a weak long trade that formed, the bias was short, or in other words, price was likely to reach this pivot low before reaching this pivot high. And so if you recall, as price came up to these levels, I was constantly looking for short entries. However, at this point right here, there was compact long price action that formed. And so if you recall, I was mentioning that the bias has changed from short into long, or in other words, price was now likely to reach this pivot high right here before reaching this pivot low where the compact price action formed. Okay, so in this way, compact price action that formed at this area right here changed the bias from short into long, but moreover, it also changed the main stop loss and target levels. So originally when this bias was short, the main target was at this level and the main stop loss was at this level right here. However, after the bias change through compact price action formed, the main target became up here, while the main stop loss level became right here. Okay, let's go on to number 2. Okay, number 2. Compact price action can form anywhere between the main stop loss and main target price levels of a given bias. Alright. Okay, so again, at this point right here, compact long price action formed, changing the bias into long. However, a bias change through compact price action can form anywhere between the main target level and the main stop loss level. So in other words, compact price action can form right after the bias forms right here. And moreover, it can even form right before the stop loss level is hit, roughly in these areas. Okay, so there's no rule as to where compact price action can form, for it could form anywhere between the main stop loss level and the main target levels of a given bias. Alright, let's go on to number 3. Okay, number 3. A bias change through compact price action is rare in comparison to the other types of bias changes. Alright? So recall, there are 3 basic ways that a bias can change. Now, number 1 is if a target is reached. So for example, at the current moment, the bias is long, or in other words, price is likely to reach this pivot high before reaching this pivot low. However, if there's a monthly gap target, for example, that provides a lot of short strength on the higher time frames, if this long trade's target was in fact reached at this monthly gap level, the bias could change to short. Now moreover, along with the same situation where the bias is long, or in other words, price is likely to reach this pivot high before reaching this pivot low, a bias can change through new pivot strength. So let's say this new pivot right here provided more short strength than this long strength. Then in this case, the bias will change and become short also. Now the subject of this lesson, which is compact price action, is extremely rare compared to these 2 types of bias changes. Now to explain how rare, out of the 6 pairs that I post on this channel, compact price action only formed twice. Now that was on the euro yen and this pound dollar. Okay, so out of the 6 pairs that I'm currently posting on this channel, in one entire year, there were only 2 cases of legitimate compact price action that formed that changed the bias. Alright, so that's just something to keep in mind. Okay, let's go on to number 4. Okay, number 4. Example scenarios of compact price action bias changes. Alright. Okay, so on this euro yen weekly chart, if you recall last year, compact short price action formed right here. And the last long trade that formed was right here. So consistently throughout this entire move, the bias was long. However, again, at this point right here, compact short price action formed, changing the bias into short, or in other words, price is now likely to reach this pivot low before reaching this pivot high. So this example illustrates how strong compact short price action is. For throughout the entire year, prices in the long bias consistently, but just because one compact price action formed, it was able to stop this entire move up and change the bias into short. Okay, so those are the two examples of compact price action that formed last year on the pairs that I post on this channel. Okay, now let's go on to a basic explanation of compact price action. Okay, so a basic explanation of compact price action. Number one, it is a foundational example of foretelling future strength in a given direction just by the way that price moves. All right, let me use the blackboard on this one. All right, so compact price action is a way to tell future strength just by the way that price moves. So one thing you want to keep in mind in terms of these type of price action tools is that, for example, if price was going up, and this is point A, and this is point B, in order to know beyond this point if there's future strength long, short, or neutral, it's not enough to know that price came from point A to point B. In order to know the future strength from this point on, it's important to know how price got from point A to point B. Or in other words, we have to know how price was moving on the way from A to B. And knowing how price got from A to B is what tells you the future strength of the longs or shorts beyond this B point. Okay, so that's a basic explanation of foretelling future price strength by the way that price moves. Okay, so let's go on to number two. All right, number two. So compact price action is a consolidation with at least 3 peaks in the direction of the new bias, and each peak must be higher or lower than the last. All right, so in essence, compact price action is a consolidation. And just like any consolidation, the more extreme the consolidation, the more extreme the move after the breakout, correct? All right, but for compact price action, we want to define the rules of this consolidation. So the first rule is that if there was a legitimate compact long price action, there has to be at least 3 peaks in the direction of the new bias, which is long, right? And each peak must be higher than the last peak. Okay, so in other words, if the peaks were like this, well, this second peak is not higher than the last peak. So this type of consolidation does not qualify as compact price action. Okay, and moreover, let's say a legitimate short compact price action formed, which would mean there would be 3 lows in the direction of the new bias, with each low lower than the previous low. Okay, all right, so let's go on to the next one. Okay, number 3. A trend line must be made from the first and second peaks in which the third peak respects. All right, so let's first cover that. All right, so for this example, we will be using 3 peaks, but recall one of the rules stated it just has to be at least 3 peaks. So for example, if there was consecutive higher highs and there was 5 peaks, if all the rules are intact, well, that's still legitimate compact long price action. And so in other words, the third peak that I'm mentioning is also referring to the last peak of the compact price action. So just keep that in mind. Okay, so what we want to do is that if there was 2 peaks like so, that's higher than the last peak, we want to be able to draw a trend line from that first peak's high to that second peak's high and project it out. And this third peak must respect this trend line that was drawn from these 2 pivots at this point right here. What I mean by respect is that there cannot be a surpass of it, nor can there be a breakout of it. All right, so let's go on to the remainder of that sentence. Okay, and moreover, there cannot be a breakout in either direction, nor a surpass of the trend line. All right. So again, we draw those 2 peaks first. We have a trend line from the first peak to the second peak and project it out. And let's say that third peak made a higher peak and also respect that trend line. Now, another thing you want to remember is that this trend line cannot be surpassed at any point, nor can it be broken out in either direction. So if price goes up this way, we can't have that. And moreover, if price goes down and breaks it out this way, we can't have that also. Okay, and that's the same for a short compact price action. So for example, if there were two lows that were lower than last peaks, and we do a trend line from the first low and the second low, and price respected that trend line, we can't have any surpasses of this trend line at any point of this trend line. We cannot have any breakouts of this trend line, again, in either direction. Okay, all right, let's go on to the next one. Okay, number 4. There must be a parallel trend line that is attached to the opposite side's pivot in which the two correlating pullbacks must respect. So when you look at compact price actions, peaks, there's the first peak, second peak, and third peak. However, notice that there's also two pullbacks. In this case, when there's 3 peaks. Now, a parallel trend line that's parallel with this original trend line right here must be attached to the pullback's pivots on this side right here. So let me just show you an easy way to make sure these lines are parallel. All right, so for example, let's say we're checking for compact price action in this area right here for a long compact price action. So we find 3 peaks. So there's 1, 2, and 3 right here. And so we draw the first trend line from the first peak to the second peak. And you can see that it was respected. And there's no breakouts or surpasses of this trend line. Now we want a parallel trend line to be attached to these pivots below at these points right here. All right, and to make sure the trend lines are parallel, go ahead and draw the first trend line right here from the first and second peaks. And draw an extra one on the same peaks. And then go ahead and drag it to a pivot on the other side. Okay, and this makes sure that the two trend lines are parallel. Okay, in this case, we attached it to this pivot right here. And as you can see, it made that second pullback touch right here also. So in other words, the first push, pullback, second push, pullback, and respected that second trend line. Then that 3 push right here, right? All right, let's go on to the remainder of that sentence. Okay, well, when I refer to this line right here, attached to the opposite side's pivot in which the two correlating pullbacks must respect, respect in this case means there are no breakouts in the opposing direction of the compact price action. However, the trend line can be surpassed. Okay. All right, so let's say there was a compact long price action possibilities. So we do a trend line from the first and second peak, and price respected that trend line. And then let's say we made a duplicate of this trend line and attached it to the other side's pivot, and price respected this new trend line on the second pullback, like so. Right now, the rules in terms of surpasses and breakouts for the second trend line right here are different from the first. Now again, if this is a long compact price action, there can be breakouts in the direction of the compact price action. So in other words, if there was a long candle that's breaking it out upwards, well, that's okay. However, there cannot be a breakout in the opposing direction of the compact price action. So for example, if there's a down candle that's breaking out the second trend line, well, then this trend line is not legitimate. And moreover, what's different from this first trend line is that the second trend line, it can be surpassed. Okay, anywhere along this trend line. Okay, all right, so let's go on to the next one. All right, number 5. Compact price action forms on the lower time frames. As of today, I personally only found compact price action on the 1 minute, 5 minute, and 15 minute charts, but theoretically, it can form on higher time frames. All right, so let me just explain this. Okay, so back on this weekly euro-yen chart, you want to recall that this weekly bias, which was long, was changed into short by a 1 minute compact price action that formed right here, which affected this entire weekly bias. Now, although I've only seen compact price action form on the 1 through 15 minute charts, as of this point today, if you think about what price action analysis is that you could apply the tools that you use on this weekly chart to figure out future strength of a pair to literally any time frame chart. And that's the beauty and also one of the stable factors of using price action analysis, right? So theoretically, since this compact short price action on the 1 minute chart was actually able to affect a weekly chart's bias, if a weekly compact price action forms, again, theoretically, it could possibly affect, for example, the 10-year chart. If you just look at the ratios in which the lower time frames are affecting the higher time frames. Okay, so that's just one thing to keep in mind. Okay, so let's go on to the most important slide, and that's the aesthetic requirements for a legitimate compact price action. Okay, so the aesthetic requirements for a legitimate compact price action. Number 1, it must have minimal wick highs and lows at the peaks and bottoms, thus the consolidation is compact. Okay, so the reason why I call compact price action compact is because a legitimate compact price action is literally compact in nature. Now, in order to keep the price action compact, the key areas you want to be looking for are the peaks and the pullback lows. Okay, so what you want on these peaks and these pullbacks is for price to not have high wicks on this top end, and moreover, low wicks on these pullbacks. Because recall, you're going to attach a trend line. And so if these wicks are high on the peaks and the lows are low on the pullbacks, that's going to create a big consolidation, right? So ideally what we want is a consolidation's peaks to have low highs, and moreover, the consolidation's pullbacks to have low lows. Okay, well, this will make sure when you draw those trend lines from the first peak to the second peak and also adjust it to the other side, it's going to keep the consolidation compact. And this also follows the general rule: the tighter the consolidation, the stronger the pressure it creates when price moves out of that consolidation. All right, so you want to make sure the peaks and the pullback lows are minimal to keep the consolidation as compact as possible. All right, let's go on to number 2. Okay, so it must have consecutive dojis between the peaks and bottoms, thus an extreme consolidation. All right, so as well as the low highs on the peaks and the small lows on the pullback, we want consecutive dojis within these pullback areas, and more of this area on the way to the second peak, all the way throughout this entire compact price action. So even up to that third peak, we want consecutive consolidations. Now this also adds on to the previous idea that the more compact a consolidation, the more pressure it creates for a stronger move on the breakout. And this just takes it a step further. So having consecutive dojis on each of these legs further increase the pressure that's created from this consolidation for even more strength on the breakout. All right, so when you locate these compact price actions, you do not want to see big candles in between these legs, and you want consecutive dojis. Okay, let's keep going. All right, compact price action cannot have any gaps within the consolidation. Watch out for illiquid markets that produce many gaps. All right. So another aesthetic rule of compact price action is that anywhere in this compact price action, there cannot be any gaps. Now that includes the peaks and the pullbacks, but also each leg in between also. There cannot be any gaps. Okay, so if there is a doji, and then next there's a big gap, and although there's a doji showing consolidation, this gap will make this compact price action not legitimate. Okay, and you really want to watch out for the illiquid pairs or even liquid pairs due to seasonality in specific hours of a day where there's decreased liquidity. You're going to see a lot of gaps in between price. All right, so you do not want any gaps in the compact price action in its entirety. Okay, so let's keep going. Okay, and before price begins its ascent or descent, price cannot have a pullback to the first or second peak's opposing pivot. All right. Okay, so let's say a long compact price action forms. That's legitimate. It's following all the basic rules as well as the aesthetic rules. Now, compact price action, before it begins its ascent, there cannot be a pullback to this second pullback level right here, and obviously not the first pullback level either. Okay, so what price action should look like on the follow through price action is something more or less like this, or it can be something like this, as long as that second pullback's price level is not reached before the ascent. Okay, and moreover, this is a way to actually confirm that this compact price action is legitimate. Just by the way it moves on the ascent can tell you whether or not a compact price action is legitimate or not. All right, and the distance between each peak and pullback bottom must be relatively equal. All right, so a compact price action at the very least has 3 peaks, correct? Now the distance between each peak and moreover the distance between the 2 bottoms must be relatively equal. Okay, so let me explain this again. So let's say if there's 4 peaks in this compact price action, which is okay, you just need at least 3 peaks, right? Each peak's distance must be relatively equal. And it's that same with the pullbacks. So this pullback distance from right here to right here, say just one like that. So in this pullback distance on the second pullback right here must be relatively equal. So what you don't want to see is a compact price action that's like this. Okay, because the distance between these peaks are not equal. Okay, and moreover, it can't be like this, right? Because the peaks are not equal. Okay, let's keep going. Okay, and the entire consolidation's candle count must be at least 15 candles, but cannot exceed 25 candles. However, there is wiggle room for this rule. Okay, so if you get a compact price action, the number of candles in this compact price action cannot be less than 15 candles, but cannot exceed roughly 25 candles. Now, if you start actually looking for this compact price action, you'll start noticing that there's actually consolidations that are very small, but it does have all the necessary aesthetics and basic rules to make a legitimate compact price action. However, it's, for example, only 8 candles big. Now, as you start looking for this compact price action, you'll know whether consolidation qualifies in terms of being at least 15 candles just by looking at it. And more or less the same for consolidations that are over 25 candles. So for example, if you see something like this and there's many candles in between, just by the sheer size of the compact price action, you'll know it's not legitimate because it's going over the limit of 25 candles. Okay, however, there is wiggle room to this rule. All right, so let's say you had a compact price action that follows every single basic rule and aesthetic rule, but let's say it's about 28 candles. Well, in that case, most likely that compact price action will be legitimate. And this wiggle room for these rules can be supplemented by the next following rules. But for example, like I mentioned earlier, if let's say this compact price action followed all the rules, however it was over 25 candles, and price made its ascent, and it did not pull back to that second pullback and made its strong move up. And then most likely at this point, you can tell that this compact price action was legitimate. However, if price actually pulled back to the second pullback level and then went, then there were too many candles in this compact price action to make it legitimate. Alright, so the next couple of rules are going to explain how to actually confirm whether compact price action is legitimate or not. Okay, so let's take a look at those. So due to the esoteric nature of compact price action, a trader must confirm the legitimacy through bias analysis and price pattern analysis. Alright, so let's go over to the Euro-Yen weekly chart for this. Okay, so again, recall at this point last year, there was compact short price action that formed, which changed the bias from long into short. In other words, price was likely to reach this pivot low right here before reaching this pivot high. Now, if you remember my forecast, at this point right here, there was a fake double top that formed. Now, fake double tops show short-term long strength. However, price actually reaches target height level before reaching the right shoulder stop loss level. Now, this price pattern actually confirms that there was extreme daily short strength, which adds proof that this compact short price action was actually legitimate. Alright, so the compact short price action that formed right here was legitimate in terms of the basic rules and also the aesthetic rules. However, as you know, the aesthetic rules do have some wiggle room. So you want to use bias analysis and moreover, price action confirmation of directional strength to further confirm the legitimacy of compact price action. And moreover, if you recall, that is why I did not enter this short trade right away and first waited to see if this daily fake HNS actually hit its target height to confirm this short-term short strength, and therefore I entered this short entry on this pullback up to these levels. Or moreover, even after I entered this short entry, if you recall, I was constantly watching the daily timeframes and the lower timeframes to constantly confirm that there's extreme short strength, and thus confirming that this compact short price action was legitimate. Okay, all right, so let's go on to the next one. Okay, so compact price action must have follow through price action. Price has extreme strength in the direction of the compact price action. Okay, so let me just show you what typically happens to price after legitimate compact price action forms. And actually, you could use this as confirmation for the legitimacy of a given compact price action. Alright, so after a legitimate compact price action forms, the way that price move is always going to be, there will be no pullback to that second pullback level, which is right here. And price will make an extreme move in the direction of the new bias. So in other words, price will be very vertical. And then moreover, after the extreme move, there will be a consolidation. Now this consolidation will never be broken out in the opposite direction of the compact price action. So price will not break out this bottom level right here. And therefore, at the moment that this bottom is broken out, this fact alone should lead you to doubt the legitimacy of this compact price action, for one of the rules were likely broken. Alright, so another way to confirm that compact price action is legitimate is to follow through price action. Okay, so let's go on to the last one. Okay, so it must have the feel or sense of compact price action, an instinctive sense that comes with price action experience. Okay, so let me explain this to you on the pound dollar weekly chart. Alright, so again, like I mentioned to you earlier, if you recall, the bias between this pivot and this pivot right here was short, or in other words, price was likely to reach this pivot low before reaching this pivot high right here. And so if you recall, I actually took a short entry roughly at these levels because it was giving me great risk parameters because the stop loss is at this pivot right here, right? Now, typically in terms of biases, when you start understanding how biases work, if price gives a pullback of this magnitude, there typically is a strong move in the opposing direction. However, as price came down to these levels right here, it was obvious it was having a very hard time in producing any short-term short strength. Now I was able to know this by looking at the even lower time frames to see signs of short-term short strength, and there were none, which gave me a hunch that perhaps compact price action may form, for it's highly unusual for price to have a hard time to get down after a pullback of this magnitude. And then just like I thought, compact price action did form in that area eventually. Okay, so in this way, as you get used to analyzing biases, you'll start to know instinctively that compact price action may form by scenarios such as these, and these unusual bias scenarios is what provides the instinctive sense or the instinctive feel of legitimate compact price action. And moreover, since last year's two compact price actions that formed were on the 1 minute chart, I can't show you that on a chart at this current moment. So when there is legitimate compact price action that forms again, I will make a follow-up video just to show you what legitimate compact price action looks like on a real chart. So please stay tuned for that. Okay, let's go to the next slide. Okay, so that's it for this lesson. In the next lesson, we're going to go over confirming biases with the lower time frames. Now, if you guys watch my forecast and analysis, you'll know that I'm always talking about confirming biases on the lower time frames. So we'll take a look into that in the next lesson. So again, like always, if you have any questions, let me know in the comment section. And I hope you guys have a great day. And thanks for watching. Okay, bye.